All right, good day, traders. Our attention today turns to October live cattle. It's going to be ticker LEV20 on most platforms. October live cattle. LE being live cattle, V being for the symbol for the month of October. And why are we looking at October live cattle today? Well, we ran a scan on our Smart Seasonals Futures platform, and we've located an 86% win rate trade over the last 7 years, calling for a short date right around here in the first week of August, lasting right around to the end of August, so about a 20 to 30 day calendar trade. It's been profitable 86% of the time over the last 7 years, with an average profit of a little over $2,400. You can see the year-by-year breakdown with that lone losing year back there in 2013. And for those of you that are a bit more visual, we can look at the October cattle historical price average pattern from a 5, 15, and 30-year historical price perspective. What is this peak right here? This is the first week of August. So we can see very clearly that we have three major averages in year terms all converging and putting in a top right here at the first part of August, and we drift all the way down here into the beginning of September. So we've got double confirmation there. Now if we go to the chart, we always want to go to the chart and get some type of confirmation from a charting perspective, and usually that's in the form of technical analysis. So here we have a daily chart of the October cattle contract. So you have basically got two trend lines drawn here, one sloping down and then the uptrend line sloping up. So it looks like price is converging here at the 200-day moving average, which also happens to be the 618 here at 106.40. One of two things are obviously going to happen. We're going to bust up and out to the upside, or we're going to trade up, or we're going to trade through price structure or support here and this trend line break and trade to the downside, which would be in lines of our seasonal bias. What we always like to do is look at it from a longer term perspective, and we go to a weekly chart. You're going to notice you're not going to see much data. Why? Because the October 2020 contract was not being traded heavily back there in May. In fact, that's when the first batch of contracts or volume came into this October 2020 contract. So we can go to the continuous contract, which basically combines all the tradable months together, and then we can look at that and see if we can locate significant price points. We like to do that on the higher time frames first, whether that be a monthly or weekly, because they're going to hold more validity as opposed to the lower time frames. So here we can see we've got multiple touches here going all the way back to 2016. In fact, we probably have more touches if we go back even further. You can see that we clearly do, going all the way back to 2010, but that's good enough for now. And we are now jostling around here. The bulls and bears are jostling around at this inflection point to determine the next move or the next direction of where we possibly want to go. So if we go back to the October contract, we know that we've got a high probability, we're talking 80-85% win rate of seasonal bias in our favor. We also have a little bit of technical bias in our favor, but we must be patient. We must wait. So right now, cattle's trading up by about 1.5%. And so ideally, we spend the rest of the week or so even converging tighter into this range, which will lead to a likely coil up and then break out. And hopefully that's going to be to the downside in our favor. So once that happens, once we get that confirmation break, or if we get that confirmation break, I should say, and we get a retest or a couple retests that shows that price does want to indeed hold below that level, that's where we'll buy put options or perhaps sell out of the money call spreads on October or perhaps even December cattle futures options. Now, if trading cattle futures or cattle futures options scares you, no need to worry. You can look at the ETF MOO, M-O-O, and this should very likely trade along lines of the futures contract. So we've got a very similar situation here. We can draw a fib retracement from that last swing low to this swing high. You see that we are losing momentum up here at the 786, right? So what we'll do additionally is we'll draw just a simple trend line analysis, and aggressive traders could consider going ahead and nibbling short at these levels. A more conservative trader may wish to wait for that trend line break and a couple of retests for a move back down to 60 and then around the $56 area. Be careful trading MOO. It's not the most liquid ETF. The options are not that bad, but if you have any questions regarding that trade, shoot me an email at support@seasonalswingtrader. So good luck, good trading, and we'll see you on the next update.